morning from our global headquarters in New York. I'm Menace Crenny alongside Danny Berger. You're welcome to Bloomberg Brief. Let's set that agenda.
Cars, chips, and drugs. President Trump threatens wider tariffs, adding more sectors facing 25% levies. A bargaining chip for peace. The U.S. keeps sanctions on Russia in place. The EU readies its 16th sanctions package. And U.S. stocks hit a record high driven by semis ahead of today's latest Fed minutes. Good morning, Manus.
Danny, good morning. There's a euphoria in these markets. S&P 500, fresh all-time high, up 4.2% so far this month. The Nasdaq, a new record as well, up 5.5% for the year. The equal weight, up 9% so far this year. So again, it plays to that breadth. We'll catch up with Julian Emanuel later on. He talks about double-digit earnings per share growth this year. It's enough to fuel the bull market. We know where his level is, 6,800. Roll it over, have a look at the bond market. We popped by 7 basis points higher yesterday. I love what BMO had to say. This was a listless backup in yields, but there was a big slate of investment-grade bond issuance yesterday, Danny, $30 billion. So a little bit of a backup there, 456.
Meanwhile, we also have a few stocks, Manus, that we are keeping an eye on this morning. Workday is falling. Morgan Stanley cut its recommendation on the stock to equal weight from overweight and a price target of $275. Those shares falling 1.8%.
Genco also on the back of it, Danny, this morning. Full-year profits slid 16% to $14.4 billion due to slumping prices for key metals. It suggested that it's prepared to cut output. There's more prices in some markets.
And finally, Bumble is plunging this morning. It is down nearly 16%. The online dating company gave a first quarter forecast that was weaker than expected on its key metrics.
Love costs. There you go. Coming up this hour, Leslie Vinjamuri. She joins us from Chatham House. Julian Emanuel, as I said, some of his calls on the equities from Evercore ISI. Danny, you look at these markets, we're barreling ahead despite the announcement or the prospect, and we must emphasize the word prospect, of 25% tariffs on autos, on chips, on pharma. And yet you look at the AAII, and the bearishness is the highest since November. There's a real juxtaposition here.
There is, maybe. I mean, you look at the last Bank of America fund manager survey that we talked about yesterday, and cash levels are so low. I guess it's one of those things. How do you feel about this market versus what are you actually doing? We keep hitting another record high, the second one of this year. Europe keeps hitting record highs, but despite all the uncertainty there, do you really want to push back against that type of momentum right now?
No, and then you just look at the flux that we have in geopolitics as Europe readies itself for another round of sanctions on Russia. So this just shows the split that we have between America and Europe at the moment on how to handle things.
Well, to that point, President Trump did give reporters an update on his tariff plans. The president said that he's preparing to impose tariffs on cars, chip, and pharmaceutical imports, with an announcement expected in early April.
Yeah, I probably will tell you that on April 2nd, but it'll be in the neighborhood of 25%.
Joining us now is Brendan Murray, who tracks trade for Bloomberg News. Brendan, this just adds to the plate spinning on tariffs. Where do we stand at this moment on what we know and what could come?
Yeah, exactly. So for those of us trying to keep track of everything that's coming in the next several weeks, we've got 10% tariffs on Chinese imports already. In March 1st, we're going to get 25% tariffs on Canada and everything from Canada and Mexico. March 12th come the steel and aluminum tariffs. April 1st is the deadline for reciprocal tariffs that he announced last week. And then we just got the sectoral tariff heads up for April 2nd yesterday. So what that says is whether you're South Korea, whether you're Ireland, a big pharma exporter, whether you're Germany with the cars, it sounds like a lot of big U.S. trading partners are in the crosshairs, and can they avoid any of these or all of these if they come at once is the big question.
Well, Brendan, when it comes to the Europeans, they're here, they're meeting. Markus Sikovic is meeting with Howard Lutnick. He's meeting with Jameson Greer. This is about the pet grievances of President Trump in terms of 10% tariffs on autos into Europe for U.S. cars. Is it in their interest to try and close that gap as quickly as possible, or at least to make an effort to close the gap?
Yeah, the case that the Europeans are going to try to make is one of looking at the full trading relationship, not just the goods trade, but also the services trading. So And we'll see if the U.S. buys into that sort of argument. The Trump administration have a long grievance with the Europeans about how American companies are treated in the EU. So the talks that we're seeing this week in Washington are really just the beginning of something that we could see play out in the months ahead. Whether those tariffs come into play or whether they continue to be used as a negotiating leverage point, we will see. But as it stands right now, pretty much every country that trades with the U.S. is looking at the threat of tariffs.
Okay, Brendan, thank you very much. Brendan Murray there on the tariff slate. Well, the U.S. Secretary of State Marco Rubio said that President Trump and Russian President Vladimir Putin could meet as early as next week to continue negotiations over the end of the war in Ukraine. Trump told reporters that Putin wants to end the war soon, but has yet to involve Ukraine in the talks. Instead, the president called for an election in the country.
We have a situation where we haven't had elections in Ukraine, where we have martial law, essentially martial law in Ukraine, where the leader in Ukraine, I mean, I hate to say it, but he's down at 4% approval rating, and where a country has been blown to smithereens. Yeah, I would say that, you know, when they want a seat at the table, you could say the people have to, wouldn't the people of Ukraine have to say, like, you know, it's been a long time since we've had an election. That's not a Russia thing. That's something coming from me and coming from many other countries also.
Kevin Whitelaw joins us now. So, Kevin, that's the president there really, I suppose, showing his angst over the peevishness of Europe and the Ukrainians not at the negotiating table. But we're moving with speed to a potential Putin-Trump negotiation. We've moved from yesterday. One call and one meeting is not enough for an enduring peace. So what is it that's moved us forward in the past 24 hours?
Well, you know, it is very clear that Trump is barreling ahead with a conversation faster and sort of with potentially giving more away to Russia than Europe had really ever imagined and feared possible. And so I think in some ways that situation that people had worried a little bit about and had you know, maybe those worries had faded slightly, but now everyone is very worried here in Europe that this conversation may go ahead, it may go quickly, and it may go without Europe. And so the words you heard there were with Trump talking about the Ukrainian elections. This all dates back in part to a longstanding grievance that Donald Trump has had with Vladimir Zelensky. It dates back to his first term in office when he asked Zelensky to investigate Hunter Biden, and that didn't go the way the U.S. president was looking for. He really hasn't quite forgiven him for that, and I do think that is still coloring some of this. So I do think when Europe listens to some of the words coming out from Trump that sound a lot like Russian talking points on this issue, it is definitely unnerving them that this may not be a settlement that Europe can possibly accept, particularly with Russia continuing to you know, sort of carry out various kinds of hybrid warfare and other disruptive activities quietly across parts of Europe.
Yeah, it was that line specifically where Trump says you never should have started it. You could have made a deal. I think that's what you're referring to, Kevin, and the things that sound almost Putin-esque. Elsewhere, we heard Marco Rubio. I just want to read out some of what he said in talking about these negotiations, saying that there's a unique opportunities to work with Russia on areas of bilateral geopolitical interest, and goes on to say some unique economic opportunities. What do you make of that, Kevin? What's going on specifically between the U.S. and Russia and the relations that seem to be trying to be reset?
That does feel like the U.S. dangling a bit of a carrot as they try to find some way through this. Look, Trump is trying to deliver on a campaign promise. His campaign promise was to help bring an end to the war in Ukraine. I think what Europe is starting to learn is that Trump may not care what that outcome looks like for Ukraine as much as they do. He simply wants it to end, and he wants to be the one seen ending it. And so to the degree that he's going to be trying to come up with a mix of a pitch to Russia about what that's going to look like, you know, sort of, you know, an improving economic relationship could be part of it. The biggest problem Trump is going to have, aside from Europe, is he has to get Putin to sign on to a peace deal. And Vladimir Putin may decide still that there's some advantages for him to continue pressing the war in Ukraine.
Kevin, thank you so much for that update. That is Bloomberg's Kevin Whitelaw. Now let's get you some other top stories that are trending on the terminal this morning. In the UK, inflation climbed to the highest level in 10 months in January, driven by airfares, motor fuel, food, and a new value-added tax on private school fees. Consumer prices, the data was a 3% increase year over year versus a 2.8% forecast.
Bloomberg sources say that X, the social media company formerly known as Twitter, is in talks to raise money from investors at a $44 billion valuation. That's the same price as Elon Musk paid for the company in 2022. Talks for the new X financing round are still ongoing, and the details could change.
Meanwhile, HSBC expects its global restructuring program to cost $1.8 billion over the next 2 years. It aims to trim $3 billion in expenses. Half of that would be reinvested into priority growth areas.
Coming up on the show, the negotiations around ending the war in Ukraine with Leslie Vinjamuri of Chatham House. That's next on Bloomberg.
It'll be 25% and higher, and it'll go very substantially higher over a course of a year. But we want to give them time to come in because, as you know, when they come into the United States and they have their plant or factory here, there is no tariff. So we want to give them a little bit of a chance.
President Trump has extended his tariff plans to more sectors, warning that it might go as high as 25%. As more announcements come in, former National Security Advisor John Bolton posted this on X, some advice back in January, saying, "My advice to the world leaders looking to do business with Trump, follow the example of Shinzo Abe and talk to Trump as much as possible, not just when you need something. Call him, meet with him, talk to him about anything. And if all else fails, learn how to play golf." Leslie Vinjamuri of Chatham House reacting to that, or rather citing that, saying that courting the president is one option and it is being tried, but this is not a sure bet with gaining advantage with Trump, and Democratic leaders who are weak at home may pay a high price. I'm pleased to say that Leslie joins us now. She is the director of U.S. and the Americas program at Chatham House. Leslie, I mean, this is so prescient, right? Because you do have world leaders around the globe, India and elsewhere, Taiwan, trying to make deals with the U.S. Do you think it's different this time, that that's not enough to save themselves from the tariffs that Trump is threatening?
I think it is different. I mean, first of all, on that tweet that you posted, boy, things move quickly. It's especially important, I think, for those leaders who are facing elections. They are in a very difficult spot. You know, they're sort of reaching out to Donald Trump, and the U.S. president is going to have implications potentially at home in a costly way. So they're in one category, but there are another category of leaders like Keir Starmer here in the UK who aren't in that position, who can afford to play a different game. But to your basic question, yeah, it's very different this time. We are seeing a U.S. administration that is prepared, that is determined, that is moving forward extremely quickly. And the overtures that other states are making to Donald Trump and his team, they're not unimportant, but Trump is sort of looking past that. He has a vision of where he wants to take the United States, and especially where he doesn't want the United States to be. And he is, he's rapidly executing on that. So, I think my word of advice would be focus less on how to influence the U.S. president and focus more on what's at stake and where to invest and what to actually do to deliver the most important results. Obviously, right here, front and center for the UK, for Europe, for Ukraine, that means trying to invest in some sort of solution that can hold the line on whatever deal comes out, possibly from those negotiations that are taking place, to the exclusion, shockingly, but not surprisingly, of Europe and Ukraine.
To that point, Leslie, good morning to you. We've had this new announcement this morning, 25% potentially on autos, chips, and pharma. The Europeans have so much at risk here. What can they learn from how the president of Mexico is dealing with Trump Sheinbaum versus Trudeau? Because they're two very different responses, and they're getting two very sort of different reactions from the White House.
Well, it's interesting you say that because actually they both got 30-day, they kicked the can down the road on those tariffs by approaching Donald Trump, by putting more troops on the border, or at least saying they had those troops in the case of the southern border. Many of them were already there. But by really cooperating with President Trump in a way that he could make very visible so that he could claim a success and claim to be doing something benevolent, but with that threat of tariffs still hanging. And I think in the case of Europe, we've seen Europeans in conversation about what can they purchase from the United States to alleviate or at least delay the threat of those sanctions. Whether it's, LNG, gas is obviously something that Donald Trump wants to see purchased. Arms, purchase of arms could be very important for multiple reasons, not only helping Ukraine, but also reducing that trade deficit, which matters so much to Donald Trump. So I think that is something, but really getting in there and negotiating hard, playing, demonstrating some willingness, but also having a spine is absolutely critical. But let's be clear, there's no getting around the fact that there's also a medium and long-term game that Europe needs to be playing, that everybody needs to be playing.
Leslie, can I jump in and ask you about that long-term game? Because if they're in a situation where economically the U.S. becomes more of an adversary, let's say, than a partner, and geopolitically, the U.S. has made clear, President Trump has made clear that they're not going to be the same guard to Europe that it once was. How does Europe defend itself? Where does Europe turn to make sure that it doesn't face the Russian threat, to make sure that its economy can keep chugging along despite the threats of tariffs from the U.S.?
Well, you've raised the hard question, and this is why European leaders look. I mean, the harsh line that's coming from many, and there is certainly a degree of legitimacy in it, is that Europe has known about this situation for a long time, and certainly for coming up to 3 years that war in Ukraine has been raging. So there's an awareness of what needs. The need for investment, for cooperation, for defense, industrial production cooperatively. And we're seeing on the back of the Munich Security Conference, and especially Vice President Vance's speech, a real urgency about that in Europe. Whether it will come to fruition, I think many people are skeptical, but there's no time like the present. That is absolutely essential. Building and supporting Ukraine's own capabilities to defend itself, to deter Russia, will be absolutely essential. And there is going to, at some point, I assume, need to be a conversation, Leslie, about whether other countries are going to get engaged in that effort to put troops on the ground to help deter Russia once a ceasefire is agreed. But you raised the absolutely vital question, and this is where the conversation is in Europe.
And that is the conversation that's taking place in Paris today. Macron convening more people to talk about peacekeeping troops. Can I ask you briefly, what does Europe need to do and Ukraine to reassert themselves and, as it were, reinsert themselves really at the heart of these negotiations? Briefly.
Donald Trump is going to keep them out right now. There's a sequencing game. And so the Europeans need to work very quickly and decisively with each other to run a parallel track of their own negotiation with Ukraine, clearly, and to develop their own strategy, seeking quietly, bilaterally, where possibly, to get in that conversation. Keir Starmer is going to Washington. I think this is an absolutely essential meeting. The UK can play a very important role right now, but the Europeans have got to demonstrate strength working together. That strength will be respected, and Ukraine has got to be right at the front of that.
OK, Leslie, thank you very much for joining us. Leslie Vinjamuri there of Chatham House on the very latest on the global geopolitical stage. Page news for you from around the world. This is what we've got. The New York Times kicks off. It leads with Brazil charging the former President Bolsonaro with a coup attempt after his election loss in 2022. And the charges claim that he led a criminal organization that plotted to assassinate government officials, including the current president.
Next up, we have this on the Bloomberg. Citi raised CEO Jane Fraser's pay to $35.5 million for 2024. That compensation package includes $11.6 million in deferred stock and $16.5 million in performance share units.
And the Financial Times leads with this. Danny, you picked this off. It's about BlackRock halting the meetings with companies that are targets of activism campaign and a crackdown from the SEC. And the SEC has placed more regulatory requirements on asset managers that may be seeking to influence corporate behavior. BlackRock and the SEC both declined to comment on that. But this goes to the heart of ESG, and this is what we were chatting about before we came on air.
Right. Well, first of all, BlackRock, one of the biggest, if not the biggest asset manager, so it has to have a proxy vote, and every time there's some sort of activist shareholder action. The fact that they are pausing meetings shows the confusion that is being sown at various levels of this government and different policy, basically adding on more regulatory requirements to try to stop activism in the form of ESG. But man, as the point of this is it just is having knock-on effects, that there's kind of an ice over in the industry as they try to figure out what the actual impact of it is.
Well, this, and in the heart of the story, the story has it that this is an anti-ESG change. But of course, it's the whole politicization around ESG, around reporting. We could talk about this ad nauseum. We're going to catch up with Julian and Emanuel in just a moment from Evercore.
From our global headquarters in New York, welcome to Bloomberg Brief. I'm Danny Berger alongside Manus Cranny. Let's set your agenda.
Cars, chips and drugs. President Trump threatens wider tariffs, adding more sectors facing 25% levies. A bargaining chip for peace. The U.S. keeps sanctions on Russia in place. The EU readies its 16th sanctions package. And U.S. stocks hit a record high, driven by semis ahead of the latest Fed minutes. Danny, good morning.
Good morning, Manus. Yes, it is the second all-time high of the year for the S&P 500. Can we hold on to it? Basically unchanged for your future session. Russell 2000 futures lead us lower, down by 1/3%. They did outperform yesterday, but now we have to think about 25% tariffs coming for autos, chips, and pharma. Jim Reed of Deutsche Bank pointing out by this time last year, we were at our 11th all-time highs, which is a comparison of the enthusiasm. U.S. Treasuries struggled yesterday. 10-year yields added some weight to it, 7 basis points yesterday, higher by another basis point. $30 billion of IG corporate issuance bonds added to that pressure, Manus. We are at 4.56% on your 10-year yield.
Yeah, we're just trucking along, 456. Let's bring in Julian Emanuel to the conversation. He's talking about the markets, and he says this: the old normal is the new normal. 10% earnings per share growth in 2025 when the Fed is not hiking is enough to fuel the bull market. Hurrah. Julian joins us now around the desk. Good morning, Julian.
Good morning.
No matter what we seem to throw at this market, we just career higher. Double digits earnings growth. It's enough to get you to the 6,800 level, which is your bull call.
Yeah, it is. It is. And if you think about how bull markets develop, right? You start where we started in October of 2022, and then people realize that the economy is fine. And when you think about where we are now, yes, the market is very expensive, but bull markets do not end simply on valuation alone. You need a catalyst, and we do not see the economy turning down. We do not see this excessive speculation, because there's always a FOMO cycle, which is generally accompanied by an intense capital market cycle. And as much as we've been thinking that that is building, we haven't actually seen the transactions itself. And then, you know, the other aspect of it is that the market is just, as long as you have earnings and a Fed that they may not cut as much as expected this year, but they're not hiking. Mm-hmm. We can continue going.
Can I ask about one catalyst, or maybe event risk is the better way to phrase it? There's a couple of dates, April 2nd, when we might get some of these tariffs that were just announced on autos, chips, and drugs. Reciprocal tariffs, that investigation due early April. March 4th, it's when the delay to Canada and Mexico tariffs, assumingly, if they go forward, will come into play. Steel and aluminum due March 12th. Do any of those dates mean anything for this market?
So what you're saying is actually a good thing that earnings season is about over, so we can focus on all this other
right,
stuff.
Of course, something else to worry about.
No, but actually, if you think about it, and you go back to the original trade war in 2018, the playbook is very similar, okay? it's no coincidence that we hit a new high yesterday and President Trump came out and said 25% on pharma, et cetera, et cetera, et cetera. Because essentially, when you go back to 2018, he used new highs, strengthened the stock market, subdued interest rates to go ahead and amp up the rhetoric.
Do you genuinely think that as long as the market is chugging along, Trump will put in tariffs, that will allow him to do what he's talking about?
Yes. Yes. And if you go back, take a step further back, and you think about what the administration learned the first time around, is that the importance of the bond market's message in regulating the entirety of the circumstances is something they're heeding. And yes, yields ticked up yesterday, but you're still in and around 450, which is tolerable. It's when we edge closer to 5% where you're likely to see the rhetoric get pulled back.
So to Danny's point, pick off those dates. I mean, you walk in this morning, the risk of 25% tariffs, we should say. Very, very phlegmatic reaction from the European autos. Small. So on those dates, is that your opportunity to get that exuberant correction, that sort of moment of correction or drop? And is that the opportunity you pick off on those days if there is a drop?
Well, it may happen before then. As we know, markets tend to discount the event prior to. And frankly, this is one of these times where if you're a long-term investor and you've got sort of that 6,800 in sight, you just sort of let your portfolio do its thing. But if you're a short-term, investor who's active in trades, this is probably a time to rein in your risk a bit. We have run a long way, and again, we have these events. We don't know how these negotiations between Canada and Mexico are going to work out based on that April 1st or April 2nd or whenever he's going to do it deadline. That to us is probably the biggest concern in the near term.
The other point that you make is, look, take your opportunities in a post-DeepSeek world. One of the things that fueled us to this new high, there's individual stories around Intel, but techs and chips did very, very well in this. You see opportunities on some of the underpriced enablers. What are they? Where are they?
We do, and actually, if you think about it, it's not just the enablers. It's also the companies that have really engaged in AI as well, and for various reasons. The most of which being their earnings trajectory over the last year or two has been very good across a number of industries. And remember, part of what's so positive about 2025 is that unlike the last couple of years, you're going to get the other 493 stocks in the S&P 500 growing earnings. So basically, whether you're an enabler, and we all know those names, or you're a company taking advantage of the AI revolution, if you're building that competitive moat, you're going to get rewarded for it.
You said something about the other 493, because Mag 7's up under 1% this year versus 4.2% for the wider index. Is leadership changing? Is Mag 7 no longer the leader of this equity bull run?
So we would say it's sort of a halftime pause. And again, going back to how bull markets develop, if we're correct in our view that the likely end, whenever it happens, this bull market is going to be after a period of intense capital markets activity and a bit more, sort of FOMO-esque speculation. By definition, those stocks are likely to lead that charge.
And then that plays through to the NASDAQ as well. The NASDAQ being up, but the equal weight NASDAQ is up 9%. So again, this plays into the adapters and the adopters thesis that you put forward.
Well, and if you look at it, and if you go back to think about how the internet developed, the companies that basically were able to build businesses and services on top of the internet, same way this will occur in AI, are going to be the ones that get rewarded.
I guess the good news, it's looking cheaper to do that too. Julian, that's all we have time for. So wonderful to have you, and we always appreciate Julian Emanuel at Evercore ISI. Coming up on the show, a summit between Presidents Trump and Putin could come as soon as next week. President Zelensky still on the sidelines. We go to Ukraine and the geopolitics next.
We have a situation where we haven't had elections in Ukraine, where we have martial law, essentially martial law in Ukraine. where the leader in Ukraine, I mean, I hate to say it, but he's down at 4% approval rating, and where a country has been blown to smithereens. Yeah, I would say that, when they want a seat at the table, you could say the people have to, wouldn't the people of Ukraine have to say, like, it's been a long time since we've had an election. That's not a Russia thing. That's something coming from me and coming from many other countries also.
That was President Trump speaking yesterday at Mar-a-Lago after talks to end the war in Ukraine took place between top U.S. and Russian officials, but they began without Ukraine or Europe involved and without any concessions from Moscow. Secretary of State Marco Rubio said that Trump and Russian President Vladimir Putin could meet as early as next week to continue negotiations. Again, Trump saying you never should have started it. You could have made a deal, referring to Ukraine. Joining us for more is Andreas Kluth, who covers U.S. foreign policy for Bloomberg Opinion. Andreas, in your recent column this morning, you say that the words of Trump, their actions from the Trump administration, may signal a historic rupture in the concept of the West. What is the historic rupture? What is the change that we are witnessing take place?
Well, the change is that there has long, for 80 decades and then centuries before, been a concept of the West. And Trump is signaling that he's no longer interested in that. Maybe he doesn't understand what the concept is. By increasingly more than we feared, siding or making Putin's dreams come true and Zelensky's worst nightmares come true. You just mentioned it. I mean, he is essentially excluding for now the Ukrainians and the Western Europeans from the talks and talking directly as if they were carving up the world into spheres of influence, as at Yalta, talking directly with the Russians without the Ukrainians or Europeans in the room. At the same time, he's made clear that he's expecting the Europeans, but not the Americans, to provide security guarantees and help to Ukraine after. So essentially, he's saying this is not our problem. Over to you, Vladimir, in Moscow, and it's your fault, Volodymyr, in Kiev. And that is the opposite of traditional American foreign policy since World War II.
Good morning to you. The stage was set yesterday for a very grand moment for Russia. And I want to get your sense of Russia being brought in from the cold like this. Dmitry Peskov said this is about restoring the entire range of U.S. relations as well as the preparation for Ukraine. So this is much, much more than about just Ukraine, isn't it?
Yes. So Ukraine has, for 2 years, but really since 2014, been sort of a test case for other things. The principle of national sovereignty in the United Nations Charter, therefore the international law, therefore the world order or the rules-based order, and the entire Pax Americana. And so Ukraine has always been that, and now it's coming, to a point. This will be over what happens in Ukraine, but Russia and America also want to work on this more general détente, to rapprochement, if you want. And that shows you that Trump is not thinking in terms of America and its allies, but has more of a soft spot for America and certain autocrats and strongmen, notably Vladimir Putin. And what they would like, and what Trump dreams of, he's been signaling this by, for instance, threatening countries in the Western Hemisphere, Panama, Canada, Greenland via Denmark, that he would really like to carve up the world into spheres of influence. This is not a traditional American foreign policy, which wants to think about a world order in which international law protects small nations as well as weak, and these large antagonistic nations like Russia have to be held in check. This is no longer that world. Trump wants to make deals with Putin, and Putin would love to make deals with Trump. Putin wants to get out of his isolation and make deals over the heads of all these other countries with the other world power.
Well, then there's this question of what happens in that reality, specifically what happens to Europe and its ability to defend itself and its economy to continue to thrive on. We're talking with Vinjamuri of Chatham House earlier in the program, Andreas, and among the things that she writes in her notes is this idea that it could push Europe towards Beijing for that economic certainty. Is that a realistic outcome for Europe?
I don't think so, because Europe is also now has become afraid of Beijing, feels exploited economically by Beijing. Some countries like Germany in the 16 years under Angela Merkel made themselves way too dependent on Beijing, both for markets and technologies, and realized that even when I was still based in Berlin 2 years ago, we're starting to turn. I think the question for Europe is a different one, which I've covered really my entire life, is will Europe, knowing that America is one way or another withdrawing from the continent, will Europe finally go one step further in the directions of a European army, which has been considered since the 1950s but never came about? Or will it continue to, at the moment, with these centrifugal forces, drift apart and maybe even dissolve, try to make a separate arrangement, maybe Poland with America and others with, other countries. So for Europe, this is the moment of truth. They've feared this all along. Now they know America is not going to protect us in the long term, maybe even in the near term. We have to take care of it ourselves. Are we, the Germans and Poles, going to get nuclear weapons? Are we going to pool our armies?
Andreas, just to that point, can I ask you, you talk about chaos, you ask the question, is chaos merely performative, benefiting the celebrity who's on reality TV, or does it amount to a historic rupture? And to the historic rupture, is that NATO's house will be fundamentally restructured over the next 5 years as we look to spend more and do more for themselves rather than lean on the United States?
It is a rupture. That is now clear. By the way, at a certain point of chaos becomes so chaotic that it doesn't matter whether it was meant to be performative. Chaos is the rupture. We are in what international relations scholars call anarchy, international anarchy. There is no one minding the shop. Now, you asked about NATO. There is still a NATO alliance on paper. There are lots and lots of doubts over whether Donald Trump ever intended and now intends would actually honor the Article 5 mutual defense clause in it. NATO, the Western alliance, now has to think about alternative arrangement, maybe a NATO without America, which is kind of unimaginable and would be weaker, certainly at the outset. And essentially the Europeans and Canadians, very much the Canadians as well, have to look ahead and make other arrangements. And I hope it happens fast enough before there's a real crisis, probably involving Russia, in the Baltic countries or the other Eastern-facing NATO allies.
Andreas, thank you very much for joining us this morning. That's Andreas Kluth of Bloomberg Opinion. Hop on your Bloomberg. You can pick up his latest opinion that dropped this morning. And now to a Bloomberg scoop. The social media company X is in talks to raise money from investors at a valuation, I should say, of $44 billion, which is the same price that Elon Musk paid for the company back in 2022. Mark Bergman joins us. Mark, this is, the halo effect. You look at the valuation on SpaceX. You look at the valuation on Tesla. He's hitting the market just at the sweet spot, isn't he?
Yeah, it's hard to say how much the investors here are investing in X, a company formerly known as Twitter, and its prospects, or investing in Elon Inc. It seems to be more the latter, right? He has, certainly his proximity to President Trump, there's an expectation that's going to have great windfalls for Tesla, for SpaceX, for XAI, and his new AI company. And X, the social media platform, is sort of like the data fueling a lot of the AI work as well.
Mark, I mean, just kind of looking at this, could X be in the position to get the valuation as it is after we know the turmoil that it's gone through? Would it have been possible if not for Elon Musk's political turn?
That's a hard theoretical answer there. I mean, it is certainly, we don't have any clear indication that there's been this massive turnaround in, say, like we look at it, it's an advertising business that competes with, it's a small competitor to the Facebooks and Googles of the world. It's since Musk took over, there's been this, as we reported, this big flee of advertisers concerned about the brand safety and the direction of the platform. There's not necessarily an indication that they're coming back in droves, but we have some great reporting from last month that some of the investors looked at the books, and it seems like The adjusted EBITDA figures are about on par with what they were in 2022 around the sale. The cash position, however, is much weaker, but clearly he's showing something to investors to impress them.
Well, certainly the bond sales went quite well. I mean, if this capital raising continues, what does it mean for the overall debt profile? What does it mean for the capacity for expansion there?
I think we have a lot less insight now that they're a private company, right? When they were a public one. I think this is in some ways an indication of trust in Elon. It is that there's this hope. I think we should see expect a lot more similarities between what X is doing and what XAI is doing on the AI front. He's talked a lot about moving into payments as being the next kind of frontier and moving beyond just advertising, payments and subscriptions. So I think if they're able to show results on that on the business side, I'm sure that's going to help them with the financing portion.
Mark, we appreciate it. That is Bloomberg's Mark Bergen there with the latest on X. Coming up, we're going to set up your day ahead. Another Treasury auction, Fed minutes on deck. We'll set that up for you on your brief. It's your Bloomberg Brief. I'm Danny Berger alongside Manus Cranny in New York. Let's get you set up for your trading day on this Wednesday. U.S. housing starts, building permits. Those come at 8:30 a.m. Eastern. Then $16 billion of 20-year Treasury notes go on auction. That happens at 1 p.m. Then we're also going to get the release of the latest Fed minutes. Those come at 2 p.m. Manus.
Danny, let's just check in on some of these individual names. Overall, at the index level, obviously, record highs, all-time highs, but individual names. Bumble sinking after the online dating firm gave weaker than expected forecasts. And then you've got Occidental Petroleum extending their post-earnings loss down 1.1%. TD Cowen says it was noisy guidance, highlights the maintenance and the capex creep for them. And then Arista Networks, just on that, it drops amid concerns around the company's reliance on the revenues generated from Meta.
Manus, just a quick check on the overall equity index level at this point. We are a little bit softer on the day after, as you say, another record high. It is the second of this year. But as Julian and Emanuel points out, bull markets don't die because they are expensive. And just to put this all in context, Manus, Jim Reed of Deutsche Bank points out that by this time last year, we had already hit 11 all-time highs. So maybe this is the new reality when you're more hesitant. You only get 2 instead of 11. I
mean, there's a real resilience to this equity market, isn't there? And Julian did talk. He talked about double-digit earnings growth. That's what you got to count on. The growth is there. Double-digit earnings. That takes you to their higher level, which is 6,800. As you said, there's very little out there to really cause that sense of real fear for now.
Yeah, well, it becomes this game of chicken. And Julian said this, and others have said this as well, that the thing that allows Trump to continue to put on tariffs or give the threat of tariffs is a market that is chugging along, that he cares about the stock market, that's the thing that's the check on him. So what blinks first? Is it a market that sells off, that curbs some of the tariffs, or is it the implementation of tariffs that acts as a catalyst to bring equity valuations down?
It depends on those dates, and we've listed them off, whether it's April the 2nd or other ones. Do you have a mini exuberant correction if something goes live, and that's your opportunity to pick them up? We can debate that when we're back tomorrow. Surveillance team will pick it up next.